Hi, Biconomy friends. Last week, crypto moved quietly, but decisively. Regulators aligned, institutions leaned in, and tokenization kept accelerating. Before diving into the news, let's look at the big numbers. Bitcoin spent the week hovering around the $70,000 zone, while Ethereum sat around $2,100, maintaining relative strength. Solana was steady near $90, and XRP was about $1.45 per coin. Fear and greed indicators remained in the fear band, with BTC dominance just under 59%. These price levels set the stage for how regulators' decisions and market narratives impacted sentiment throughout the week. Let's start with a few quick ones. Animoca brands invested in Avalanche to expand Avalanche across Asia and the Middle East. The SEC approved Nasdaq's pilot to trade tokenized stocks alongside traditional equities. Canada is doubling down on compliance, tightening rules, enforcing registrations, and treating crypto as part of the core financial system. Meanwhile, Brazil paused its crypto tax expansion ahead of elections, delaying stricter policies. Note that regulation is not slowing crypto, it's just evolving differently across regions, which directly impacts where liquidity and users flow. In the US, regulators made one of the most important moves of the year. The SEC and CFTC clarified how crypto assets are classified, while also opening the door for safer capital formation through potential exemptions. At the same time, crypto is now being tested as collateral in derivatives markets, and lawmakers are close to advancing the Clarity Act. This is the foundation for institutional scale. Clear rules unlock capital, products, and deeper liquidity across exchanges. Morgan Stanley updated its SEC filing to list its Bitcoin ETF on the New York Stock Exchange under the ticker MSBT. Morgan Stanley analysts suggested Bitcoin ETFs could attract up to $160 billion in inflows as demand grows. Institutional capital is still early, and the next leg of adoption will likely be driven by traditional finance onboarding. Markets might be moving sideways for the time being, but regulation is getting clearer. Institutions are scaling in, and real-world assets are moving on-chain. For us, my dear Biconomy friends, this means one thing: more products, more liquidity, and more opportunities ahead. Thank you for watching, and I'll see you next week.